What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 28th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about the broad discussion point of altcoins. I want to take a broad sweeping look across the altcoin space and figure out whether or not altcoins are looking generally bullish or bearish. We're going to be looking at a lot of the major names you guys are familiar with, and on top of that as well, we've got a sponsored interview with one of our favorite emerging layer 1 plays in the crypto space, no other than Radix. So stay tuned for the sponsored interview, you guys won't want to miss it. All right, let's go ahead and dive straight into the conversation, guys. I want to go ahead and outside of just taking a look at Bitcoin, as we usually do, as you all know, my general stance on things right now, the higher lows over a longer time frame that we've been seeing, I want to go ahead and dive into the altcoin space. What I think is really interesting to talk about is how the landscape for altcoins has changed over the past few weeks. Since back here at the start of the year, in the mid part of January, we had about 78% of the top 50 altcoins in the market outpacing Bitcoin over the last 90 days. And this again came in with a lot of the strength we had been seeing over the previous few months towards the close of January, right? As we started to go into the new year. But on the other hand, over the past few weeks, with the turmoil that we've seen due to fears of the Fed, fears around the Ukraine crisis, we've started to see altcoins dipping back down below towards around the 25% mark, where we start to enter into quote-unquote Bitcoin season territory. Now, I want to go ahead and emphasize one big thing about the altcoin index, in that we generally like to actually go long altcoins during this period of time when we dip below the 25-point range. I want to go ahead and explain why that is. And the reason why is because down here, this generally means that altcoins have been underperforming against Bitcoin, and therefore we can capture them at discount opportunities. So for example, we could see altcoins started to outpace Bitcoin substantially. There was over 75% of the market here back in late March of 2021. Now, if you guys were around back then, you guys will know that that was kind of the period of peak fear of missing out, peak speculation, almost, if you will, that the punch bowl for the party was full. Everyone was having a great time. Nothing could go wrong. Doge was going to the moon. There was Shiba Inu, all these different meme coins. And that was really the days where Robinhood trading as well was at an all-time high. Retail investors were really taking about major amounts of speculative risk through all the trends going on in TikTok, etc. And we can see here that when we got past that range, we started to have this kind of shakiness here on the indicator, starting to establish those lower highs and lower lows. That was your telltale sign to get out, right? Now, on the other hand here, we want to buy when there is fear in altcoins. We want to buy at a discount. But at the same time, we don't have to just directly buy when we get into this range. We could start to average in. We could start to wait and look for signified, I'll make sure I word this properly. Don't want to say fancy lingo. We want to look for, in this case, signs that altcoins are starting to take over the trend, that they are outpacing Bitcoin consecutively, or that the situation is not getting worse, which means we want to see higher lows and higher highs on the trend for altcoins, right? So it doesn't mean we can't start getting excited about them until we see that, but that's something we'd really like to see if we're to hold kind of good short-term, long-term positions in altcoins. So let's just go ahead and take a look here at what's going on across the major players. Now, Ethereum, you guys have seen me talk a bit about. I'm not going to waste too much time on it, but I want to go ahead and emphasize a great key point here, that generally speaking, Ethereum is establishing higher significant highs, one here in May and one here in December 2021, and it's continuing to establish higher lows, one back here in June and May of 2021. We saw one here in August of 2021, here in October of 2021, and also here in January of 2022. For really, what's almost coming up on a year, Ethereum has been consolidating sideways against Bitcoin, and it has been establishing these higher lows and higher highs. That's generally a bullish trend. It's not a sign or indicative of a bear market by any means. Right? People can argue all they want about the dollar pairs, but generally speaking, we should see the riskier plays that generally outperform Bitcoin during bull markets, right, starting to decline if this was a bear market. It's very, very rare that that trend will deviate. Let's take a look at another play that I don't see getting talked about a lot, but it is the fourth largest cryptocurrency, technically the third if you're excluding Tether and other stablecoins. And that is Bnb, or Binance Coin. Now, I don't use Binance because I'm a U.S. resident in this case, so I don't use the platform. But between Binance Smart Chain, which is available to everyone to use, and between the large range of users on the Binance platform, BNB has held up as a titan in this space. In fact, if we are really just taking a look at the chart here, right? This is not even on the logarithmic one as well. We can see that BNB has really not only made a lot of gains against Bitcoin since back here in January and May, but has held the vast majority of them. And on top of that, again, has turned previous ranges of support in the past, right, into a linear line of growing support with higher lows over time, right? So generally consistent resistance here at around the same price range here, about 0.012 BTC per BNB coin. We can see that this trend is just consistently building upwards here with higher lows, signaling here that it might be set up for a third retest and a breakout higher. I gotta say, BNB being such a large player in this space and having this kind of technical price strength is really exciting stuff. Not to mention, no serious amounts of sell side volume to ever in any way match the kind of buy side volume we saw back here. Really, really optimistic looking chart here. Let's take a look at XRP BTC. XRP, all the while a controversial play in the crypto space, and all the while I'm not a massive fan of XRP or Ripple's technology, I do want to go ahead and emphasize here that with the current geopolitical issues going on right now, XRP and therefore Ripple's technology might have a place in the market with all of the censorship going on around the SWIFT payment network in regards to the whole crisis that's currently unraveling. So I think that's one major macro event to consider, but even if you were to take that aside, just take a look here at the price, right? Generally, we've been in a trend since back here in May of 2021 where we'd had lower lows and lower highs. But on the other hand, we've started to flatten out. We've started to go sideways and accumulate, and we've seen that the bulls are starting to buy in XRP against BTC at higher prices. For example, here in November, right, we were at a lower level here, pretty significantly lower level than we were here in January, where buyers started to come in. Even during this period of fear in the market, right? This idea that, oh my God, we might be entering into a bear market, right? But if we're entering into a bear market, why are people paying higher premiums for altcoins against Bitcoin? It just generally doesn't make sense, right? So again, I think this is, again, a slight sign of confidence. It's a quiet one. It doesn't capture everyone's eyes, especially if you're not listening to what price is telling you. And we can see here in the daily, right, consistent buyers coming in at this same price range around 1,800 sats, which used to be a range of consolidation that was broken previously, right? So it's interesting to see that it's building up higher ranges here over time and making continuous progress upwards. Let's take a look at ADA BTC, Cardano, or I know people always give me crap for mispronouncing it, ADA BTC. Now, for Cardano, I want to go ahead and talk about how this, for me personally, is starting to get towards a price range where I'm looking for some key levels of support to be tested. I understand for the ADA bulls out there, it has been a brutal journey since back in August, right, when we started getting to the time frame where smart contracts went live, I think in September. And price has just been continuing to drag down since. I think around 2,000 Satoshis, this is a very important range to look at. I'm not saying to go long it just yet, but to see what happens when price comes down and retests 2,000 sats. It's a big even level against Bitcoin, but we can see that it was previous support here, it was previous resistance back in the past, and previous support here and here back in 2018. If that level gets broken, that could be a really worrisome sign for Cardano. On the other hand, if it holds and we get a little bit of buy-side pressure, maybe even establishes higher lows and higher highs, it could be a clear sign here that Cardano is going to start to move higher against Bitcoin. And again, another sign that plays like Cardano, which are large players in the market, are ready to trend higher in price, right? And I wanted to also take another perspective. It's just one that I think is important because out of all the ratios I've looked at, ADA ETH or ADA ETH has been continuing to play as a significant one. We can see here that there is a really solid trend here with the ratios, where generally this has been a point of support here around, I think it's around 30, probably around 31, like 33,000 to 3,200. It's generally the range where we start to see buyers come in, like we saw back here. And we also see that usually when ADA goes above 5,600 points against ETH, right? And this is fractions of an Ethereum per ADA token, right? So just think about it that way, right? If one ADA was equal to one ETH, the ratio would be 1, right? So what we're talking about here is fractions of ETH. And either way, to view it in the simplest way possible, if this is trending higher, right, this metric we're looking at, it means ADA is growing against Ethereum, or it's outpacing Ethereum. Maybe it could be that the market is pulling back and ADA is holding up better. It's not selling off as much as Ethereum, right? And vice versa, right? When it's coming down here, it means Ethereum is outpacing ADA. And it's been doing that since February, technically. So this is why, again, I want to emphasize a very big point. We talk about this a lot on the Dash report, which is that all the while, guys, like we are keeping an eye on the altcoin space. It is important to ask yourself 2 questions. First off, is your altcoin outpacing Bitcoin? That's probably the first important one to ask. And then on top of that, even if it is outpacing Bitcoin, are you outpacing the second best candidate, which is Ethereum, right? Which it itself has been outpacing Bitcoin quite steadily since back in 2019. And if it's not establishing those higher lows and higher highs, then it might be a cause for concern for you to wait and see if a trend starts to form that makes it more favorable. Now, next up is Solana. Solana has been, of course, one of the newer plays here. All the while, it's been around since 2020, right? And I think was even being talked about in its early stages back in 2018. Solana, again, has been one that on the long-term time frame has been establishing those higher lows and higher highs. The momentum, of course, has stalled a bit from the really sheer confidence it had in the first half of 2021. But the major thing I would like to emphasize here that I think we need to look out for is that all the while we've had these higher lows and higher highs on the longer term time frame. In the shorter term time frame since back in August, we've had generally slightly lower highs and slightly lower lows. And what I would really like to see here for Solana in order to actually make a play is that, again, like XRP, we can start to reverse that trend, where we can start to establish higher lows and higher highs on the shorter time frame, get back up here and really establish itself for the next breakout. I gotta be honest though, I feel a lot of the momentum in Solana has really faded. A lot of it, in my opinion, just there's too much noise in Solana from what I could see. But to be honest, there are some fundamental projects, and it's got the backers in this case as an ecosystem and the venture capital to be able to spur a lot of projects. So I'm eager to see if it can continue to gain ground, but nonetheless, nothing negative against it. I just want to see more established technicals here where we start to get higher lows and higher highs. Last up here, and this has got to be the I don't know if I'm trying to think of a term in this case. I guess the outlier here in the market has been Luna BTC, right? Or Luna, which is the native currency for the Terra protocol. Take a look here at the daily or even the weekly chart. Terra has been crushing it. And again, sure, on the logarithmic scale, momentum has started to slow down compared to what it was in the past. We just saw Luna do a 50% move against Bitcoin here in the past week. Doesn't look like bear market activity to me. and this is my point, guys, is that, again, all the while, for example, I'll be candid saying I don't have a position in Luna, right? So I can't, can't sit on an ivory tower and say, I told you so, right? No, I haven't been invested in Luna. But I do want to emphasize one thing, which is that like these clear outliers, right, especially during periods of fear, prove that the market here is still confident, that the market is still expecting that there's more to grow. You just don't see these kinds of buy-side activity, these kind of moves here in price for these cryptocurrencies, just basically during these periods of fear, right? We're establishing consistent support with ranges back in December. We're coming back up right up to those highs against Bitcoin. And even in dollar terms, considering all the sell-off in the market, it's still holding up quite well, right? It's just about $25 down from the general resistance range at $100 that it saw in the past. So this is really exciting stuff here. Now, all the while, I know we rambled on about a variety of different places, guys. I'm sorry if I didn't get to covering the crypto that you're watching. The major trend is this, that most of these are either getting down to discount ranges where we are going to have to see if they can hold support, or many of them are already showcasing the signs that they're ready for higher prices, right? And until we start to see Bitcoin breaking down past that $30,000 range. Altcoins continuing to establish these higher lows indicate more and more that the trend is going to be climbing higher. We've been very diligent on this point here, guys. I know I sound like I'm being a dead horse sometimes, or I might be the outlier. I know a lot of people can get caught up in the fear in the market. A lot of content creators will say, oh, we're going to 200K, and then they'll say, no, we're going to 20K. Guys, I'm here to give you all the rational, at least what I think is the rational take here, or at least what I can rationally perceive about the world, right? Everyone thinks their own opinion is rational, so I guess that's a bit of an arrogant take. But my major point is that from what I can perceive, this cycle is just going to take longer than most people think. And I think that we could see Bitcoin getting up to that 150, 200K range in November 2022. And on top of that, see altcoins continue to gain dominance in the market, continue to outpace Bitcoin, and get up above to new all-time highs in altcoin market dominance and market cap sometime in January, February of 2023. It's just going to take time to get there, guys. We're talking about a year out from now. But if you can maintain that perspective, you might be in for some great opportunities in the market. And speaking about great opportunities in the market that I'm keeping my eye on, one of them is Radix, our sponsor for today's video. They've been a favorite of ours here on the channel. We've had them on many times in the past. So we're going to be diving into a really awesome interview with Jeremy, who's the CMO at Radix. He's going to tell us a lot about the vision and some of the major developments the protocol has coming. So let's go ahead and dive into the interview. Alrighty, everyone. So today's sponsored interview, I'm sitting down with Jeremy Epstein, who is the CMO at Radix DLT, one of the projects we've been talking about a lot on the channel over the past couple of months, as I've been getting really excited about the roadmap and vision of the protocol. Jeremy, it's a pleasure to have you. You're not just a new name to Radix. You've been an advisor for the project for some time and have moved on to this new CMO role, which I'm really excited to hear more about. So Jeremy, thank you, man, for making the time. It's a pleasure to have you.
Oh, it's my pleasure. Thanks for having me.
Awesome. And so I want to go ahead and first up, before we even dive into Radix, we're in a pretty crazy time in the market. What's your general sentiment? What are you and the guys feeling in regards to the crypto markets at the moment?
Would it be crazy to say like I feel totally calm? Because this is part of the ebb and flow of the arrival of a new technology. There are going to be booms, there's going to be busts. I mean, if you go all the way back to like Carlota Perez's work and all of those types of things, these technology life cycles, like it happens. I've been through a couple winters now. I'll go through another one. As long as the zoom out chart is up and to the right, which it is, I tell people crypto is the single best thing you can do to put skin in the game on becoming Zen, because eventually you're just like, it's going to happen, man. You just have to have patience.
Well, I think that was the best answer possible, Jeremy, and it proves you've been in crypto for a couple of years, man. That's very good.
I got the gray hairs to prove it, my man.
a gray hair for each 20% dip.
Pretty much, yeah, exactly.
Well, very cool. I appreciate your thoughts on that, Jeremy. I know it's good for everyone right now. And I think what's really interesting today is we're going to get to dive into a little bit about what Radix has got in store, because I think what's so nice about Radix as a protocol is not just like the philosophy of what you guys want to build, but the way in which you're executing delivery, these kind of multi-quarter goals, meeting on those deadlines and really delivering the vision. So first off, for those who may not know or maybe have a good grasp of it, what is the goal of Radix as a blockchain and as its own distributed ledger?
I mean, it's going to sound a little nuts when I tell you, but our goal is nothing short of providing developers and builders with everything they need to obsolete traditional finance. We think, we started from the premise that I don't think anyone else, and this is what brought me into this role. No one else in this space started from the problem of, okay, the global economy is $400 trillion. What do we need to build, and how do we begin that process starting today to create a platform that's going to be able to support that type of volume? Because if you go all the way back, you're looking at like 2 million TPS. Nobody's even close to that. So I think what makes Radix so exciting for me is that we have this very, very long-term but future-back approach. And then we've just taken a very intentional, methodical, execution where we just kind of keep hitting, keep delivering. And basically, we're building for the long haul here. This is not a pump and dump scheme. It's not like let's just chase the latest meme coin. We are passionately committed to the idea that everyone's money, everyone's value should be treated equally. It should not be discriminated against. And we're building a decentralized public network to enable an entire generation of DeFi builders to go and have the single best developer experience in DeFi, period, end of story, on a platform that's essentially ended the scalability problem forever.
That's very cool, Jay. And I think one thing that builds on that, and I remember I was talking to Pierce about this in an interview a couple months back. The whole philosophy has been this kind of high level macro view of basically scalability for developers, making the time to build something much quicker, scaling security, taking from what we've learned from all these issues in the Ethereum network and other layer 1, layer 2 ecosystems, removing those inefficiencies, and really backing that all around a community ecosystem that's focused on developers first and foremost, because that's what you need. You can have, potentially all the users who are excited. You can have the greatest technology, but if you don't have the developer tools and ecosystem, that's the most important. And for me, what stood out so much is that I remember Pierce almost like during the past couple of years, as I've been following Radix since probably late 2018, I think when I met Pierce, I remember hearing this constant focus in most of the conversations we had where he's like, we constantly talk to developers and ask them, what's the problem that they're having with Solidity development? How can we build a language and framework that really helps them to be able to go out and streamline what they're already doing? And I think that's where Scripto really comes in. We've already gotten to see what it looks like to a degree. The libraries are public and out on GitHub. But I mean, I'm curious, Jeremy, like how would you explain to people like just how much Scripto is going to change the lives of developers and streamline DeFi adoption?
Yeah, I mean, if this podcast thing ever stops working for you, you can come work on the Radix marketing team, man, because you understand like conceptually that the problem in DeFi today is not necessarily capital, right? The capital's coming in, it's blowing up. The problem is developers. There are approximately 18,000 developers in all of crypto right now. There are 27 million developers who aren't in crypto. And what we've done is we've spent a lot of time trying to understand what are the negative experiential points, the pain points that developers have. And we constantly hear the same thing. The EVM based model is in a message oriented framework, essentially a paradigm, if you will, is throttling us. We spend a lot of time writing code and then having to check it. Most of the time, like Solidity developers will tell you, hey, I spend 10% of my time actually writing, and the rest of the time is just auditing and all the security things because it wasn't built for this. So developers, that's not where you want to spend your time. That's not the creative part. You want a platform where all that's taken and built in from the ground up. And I think that's what's so exciting to me about both Scripto combined with the Radix engine, which is really the first engine for finance for a Web 3.0 project, because the engine in basically taking things that have to be defined at the programming level in the EVM world and baking that into the execution layer, the same way that like the Unity game engine did that and revolutionized the gaming industry back in the 90s. That's what we allow developers to do. And what we've seen is that people who take a look and kick the tires, if you will, on Scripto have a couple very similar experiences. We actually call it the Radix revelation, right? You basically have this moment where you're like, wow, a lot of the things that take me so long and are so difficult to do in the existing DeFi paradigm, I can do in a fraction of the time because so many elements that make finance work are already baked into the execution engine. And Scripto itself is a very powerful language that people can learn quickly. Yes, it's Rust based and that's helpful for Rust developers, but we've had people, who came in and saying in our Discord saying, look, I've never really coded before, but over the weekend, I built like a flash loan app, which is mind boggling to think of. We've had people, our CTO basically has demonstrated that you can take the 10,000 lines that make up Uniswap, which is like the gold standard for smart contract Solidity development, and replicate all of that in 150 lines. I mean, that's the type of efficiency and improvement we're going to see. And we've had, since we basically launched crypto preview back in December, we've had overwhelming response from people who are like, it's like the blinders, the proverbial red pill. We like to call it the teal pill sometimes. You know, they have this moment, they're like, oh my God, this asset oriented programming model that you're bringing in is going to be obvious in 10 years that this is the way you do DeFi. And right now, because of the way people operate on the EVM and sort of use it as the base point, it's a little bit different. But once they experience it and play around with it, which they can do on nights and weekends, revelation.
I wanted to build on that journey because I think you did a great job explaining it. But I think one thing that people sometimes, when they're learning about Radix, they have a difficulty understanding this concept of being asset oriented. So could you explain that difference in probably like the simplest terms so people can get that kind of breakthrough concept? I think it's honestly like it's a really big part of what makes Radix stand out.
Yeah, well, I mean, now you know one of my core challenges is how to explain the whole concept because, you know, the thing is, Radix is radically different from the existing paradigm in so many ways. It's radically different at the base layer, as you know, the consensus mechanism and our sort of shard space. It's not a blockchain, and it uses something called Cerberus for consensus. The execution layer is not an EVM. It's this Radix engine. And the programming layer is Scripto. It's not, you know, WASM or whatever is happening or Solidity on the top layer. But basically, the fundamental premise is that in the Radix engine, concepts like assets, tokens, vaults are native. And what that means is, you know, Nicholas can have a vault. And it's like this, the way you would physically think about, okay, I have a vault and I have 10 coins in it. Okay, so the Radix engine knows what a vault is. It knows what coins are. It knows what tokens and how to define them. And then you can define attributes for how those behave. And then there's certain things that are allowed. If you have a coin, there are certain things you can do. Can you eat it? Not really. I mean, you can, but you can define that away, right? Can you plant it? Not really. But can you send it to someone? Sure. So what happens? Then a container comes. It moves digitally from your vault into the container. For the life of that transaction, it's in the container. It goes, or for the beginning of the transaction, it goes to the smart contract, and then it goes through that. And now the asset, the token was in the container, now in the smart contract. Okay, done with the smart contract, trade X for Y, put it back into a container, ship it to my vault or someone else's vault. And it's like, if you were to whiteboard how you want assets to flow through a system and then have the ability to write that in code, that's what Radix allows. It's a much more intuitive development environment for finance than anything out on the market. And it's just like, you know, this concept that if you look at the way EVM works, it's about sending messages, which is why you're always giving permission to smart contracts to update different ledgers, and you have all these securities. Like when you do a Uniswap trade, you have to give 2 permissions, right? So those are all opening up security holes. You remove that complexity and you make things that are impossible to happen, or that are possible in the EVM world, impossible on Radix. And it just becomes a much more intuitive, natural, fun, even safe, secure, flexible development environment where, frankly, if you're a developer and you're trying to understand what the DeFi future is going to be, which is going to be DeFi first, DeFi is going to eat most of CeFi, maybe not all of it, but most of it, like, and you want to start playing around. Do you want to spend 10% of your time coding and writing messages and 90% debugging and auditing, or do you want to spend 90% of your time writing innovative dApps for finance and 10% of the time doing the QA? Like, we think eventually people, and they're already figuring it out, we think that's going to become a no-brainer.
So if I get it right, Jeremy, in this case, you're focusing as a developer when you're building these applications on the journey of what a token can do in this case. And it basically adds much higher parameters of security rather than a Solidity contract in this case, where, again, as you mentioned, you're giving permissions, and there could be so many different ways that that token could fall into the wrong hands if someone finds an exploit in the contract. Got it.
Exactly. You nailed it. I mean, it's like the recent OpenSea hack, for example. Like, that just could never happen on the Radix network. You know, like those types of permissions and backdoors, like it won't happen. And we're actually working on an infographic to fully explain why, because I realize it's hard for people to get their head around, because they've almost accepted these hacks,
It's normal, right?
as normal.
Yeah.
And it's like, it's great for those of us who, don't mind, jumping off the ledge and realizing sometimes the parachute's not going to open, because that's the life in the Wild West. But you want the rest of the economy to come in like, oh, I'm sorry, you lost $30,000 to some hacker today, but don't sweat it, it'll be fine. And you're like, what? No, that's not going to work for everybody else. We have to make sure at the foundation layer that that's not going to happen. And I tell people, look, we've been at this, Radix has been at this for 8 years, which is an eternity in crypto. It's like a multiple generations. And sort of what I tell people is like, look, everybody else, and I love all the other layer ones. We're all committed to the same thing of decentralizing finance, and the goal is noble, and I want everyone to succeed, and I love the competition. But what I think most of the other general purpose ledgers are doing is they're saying, okay, we built a one layer foundation, now we're going to build our house. Well, that's great until the third or fourth story, but pretty soon it gets pretty wobbly. What Radix did is say, wait a second, we're going to have to build a 300-story skyscraper. So before we can start building up, we need to build down and dig and build a solid foundation. And that's what we've spent all this time very methodically going through and saying, okay, if this is going to support $400 trillion, I know I can't even take myself seriously when I say it. Like, you need like the safest, most robust, most scalable infrastructure for delivering that in a Web3 environment. And, when I understood that, I was like, wow, nobody's thinking bigger or broader than Radix about this. And, there you go. So
Well, you bring up a good, no, on that point, Jeremy, I think again, like one thing that I've gotten kind of stale on when it came to DeFi, I'm still to this day, I love Ethereum. It's got its flaws, but I think the thing that I ran into that kind of served as a blockade for me with DeFi is that we haven't seen any kind of, we've seen the Uniswaps, the compounds, Aves, and they found their place. But to be honest, it's a bit of an echo chamber, right? The scalability of these applications into the real world have been really limited. And all the while, there's definitely the legal side of it, which is definitely still up in the air with regulations. It has a lot to do with the technical framework to be able to build much wider applications that are still secure and don't get overly complex. If an AMM of swapping from one token to another on Solidity in the most optimized fashion is what we have for Uniswap or SushiSwap, we've got a big problem on our hands if we want to build scalable applications for, as you mentioned, the trillions of dollars that are out there in the traditional world, which eventually will move into this world. It will be tokenized, but it takes time. One thing I wanted to ask you, Jeremy, is, on reaching these goals and stuff, talking maybe a little bit about where we are right now with Radix. We were talking earlier about the libraries and GitHub being available and moving towards Babylon. What does that picture look like for the coming months for Radix? Anything exciting coming up?
Yeah, no, I mean, I think for me, it's all exciting because we're just continuing to execute against the roadmap. But right now, we're on our Alexandria release. So mainnet's live. You can stake your tokens. You can, send them to you can do transactions. There have been some really interesting projects, both people building DEXs and AMMs and all these projects. There's so many things happening right now. I have no way of knowing all of them, which is exactly where you want to be. People are coming in and they're playing. Now, when you're building a dApp, right now you can't deploy a smart contract onto the Radix network. That will happen with Babylon. But what you can do is you can run it in a local simulator and get the full feel of that. And why this is important and why so many people are flocking into crypto right now is because what they understand is, hey, this is like training. It's preseason. I can learn the ins and outs of crypto. I get my head around what asset-oriented programming looks like. I can understand how much better the code on Radix is going to be come Babylon time. I can look at all the things that Ethereum done. And like you, I mean, I think Vitalik is one of the great innovators of all time. Like, I'm so grateful to everything that he's accomplished. I just have issues with sharding, breaking atomic composability, and separating capital pools to fracture liquidity. Like, it's hard for me to get my head around that. I'm sure, and I'm not saying Ethereum's doomed by any stretch. I mean, they're a juggernaut and, you know, first mover and all kinds of stuff. I just think there might be better alternatives, and that's what we're trying to do by making it better experience for developers to be able to write production grade financial applications on a decentralized public ledger, and to have much higher confidence that the assets that they're going to have under management are going to remain safe and secure. Yeah. And otherwise you'll never get the innovation and you won't do it. So I think most people are saying, let me get in, let me jump around, let me play around with this right now, because by the time Babylon ships at the end of this year and you can get smart contracts and basically, you know, sort of the gold rush, if, as it were, begins, I want to be ready. And I just think that those are the people who are the forward-looking developers, and they align with our values. You know, we're playing the long game here. This DeFi revolution is going to take a while. As much as we all want it to end after one Super Bowl out, it's not going to, you know, but it's going to take a while. And so these people understand this is going to take a while. They understand there's a regulatory component, which is why they love the angle we brought in terms of badged KYC and what have you, but that's a different issue. So the response has been great. We got, like, you know, the growth in the Telegram channel has been tremendous. And so, I mean, we're just really pleased with the anecdotal and quantitative feedback we're getting about how powerful it is.
That's awesome. And Jeremy, you brought up a good point, which is that, you know, with ETH2, I mean, there's multiple steps to Ethereum down the line and stuff that we have to see them deliver on. But when you mentioned is this concern around composability, and it's something that I think is not understood enough by, like, the general public. It's something that's talked about sometimes if you're maybe, for example, tracking like a variety of different protocols out there talking about this topic. But basically with Ethereum starting to shard its network, there is a really big question as to whether they're not going to be able to maintain composability. Basically, as you're sharding the chain, right? Having this ability to be able to communicate with those various shards, conduct transactions, maintain a consistency between those different networks. So I think it's a very big challenge. And I like that Radix has been considering that for a very long period of time from the looks of the white paper and the theory behind the project. One thing though, I wanted to close things off, Jeremy, like, I mean, if let's say, for example, we've got two different types of people out there who might be listening. There's obviously people out there who are looking to support the protocol, be participants in the ecosystem, but at the same time as well, there are also developers. What are the best places those two people could go to if they want to learn more about Radix and see what you guys are up to?
Yeah, I mean, if you're a developer, we've built a landing page just for you, developers.radixdlt.com. And it's sort of like a, excuse me, almost like a choose your own adventure type experience. It's, you know, we're not going to tell you what to do. We're going to say, here are a couple options of how you can begin to explore Radix and the power of crypto and all that. Whichever one makes sense for you, here you go. So for developers, I'd say developers.radixdlt.com. That's where you want to go. If you're what I would call a DeFi aware non-developer, then, you know, go to the website RadixDLT, or even better, our blog. I mean, I'm very proud of the content that we put out. It's really high quality. And, you know, what I tell people is, like, there's a process to this moment of Radix revelation. Right? The first one is you sort of say, okay, I'm of the belief that DeFi is going to mostly eat CeFi. Great. If you don't believe that, Radix doesn't make any sense to you. Then you get to a point where you start to have questions. You're like, I really admire Ethereum in the EVM world, but I'm starting to feel a little uncomfortable with how this is going to scale without sacrificing composability, which is like the superpower of Web3. And then you get to this point where you sort of say, wow, so Radix has a better development environment. It's easier, has this finance engine, and it scales like it's solved the scalability problem forever. It basically sounds too good to be true. And that was my reaction. I'm like, this is just no way. But then you kind of dig in and you dig into the shard space and Cerberus and like how the Radix engine works, and you start to take that step. And if you come at it with that open mind, then you kind of get to that final stage where you're like, oh my God, I now understand we may not make it. And If we don't, that's fine at the end of the day, because DeFi needs to make it. And if someone else better comes along, more power to them. This is about DeFi winning. But when I think the people who are committed to DeFi and see the opportunity of DeFi, whether on a philosophical or financial or any other basis, they owe it to themselves to say, all right, you know what? I'm going to spend some time kicking the tires here, looking around, going to the GitHub, cloning stuff, playing around. And if you decide it's all BS, go away. But if you're like most people who understand DeFi and understand development or I think you're going to walk away saying, wow, what these guys have done here is pretty interesting. And then hopefully, you'll consider joining the community, and maybe we're of the same, cut from the same cloth. And if not, then go somewhere else.
Yeah, I think, Jeremy, like in a space that has, and the Ethereum community, there have been people who believe deploying on mainnet is the best way to go before getting things on testnet. To see the millions of dollars of hacks in the DeFi ecosystem that have persisted, and really, I think a limited window of innovation. Now, looking at Radix with, for example, the Jepson report that you guys had got recently, the professionality of delivering on roadmap deliverables, providing a solid dev environment this early on. I mean, honestly, I think you guys are doing everything the right way. And as you mentioned, again, like there's no 100% guarantee of anything. But as someone in like myself and stuff, when I look through the market, I think one of the biggest things I've learned after all these years is it's not a matter of timing the market. It's a matter of playing your cards, finding the right plays. And as you mentioned, as we talked about earlier, putting aside the market sentiment and getting in your Zen mode. Get ready to meditate, wait for it for a while, and it'll play out, right? So anyways,
you got it, man. You got it. I mean, that's why that's why I feel calm, because I know that this team has been heads down from the beginning, and it's just keep chugging away. And that kind of stuff, that persistence, that focus, that discipline, no guarantees. That's fine. But that's the type of work ethic and behavior and culture within a community and a core team, and the shared values that doing this right is worth it, is worth some of the extra weight. And maybe we're not perceived yet as sexy as some of the other people. I think that day will come when people say, wow, these guys have really been in it. They've thought about this. They've been intentional. And most importantly, developers are delivering value and feel empowered to go do what they need to do. So hopefully it pays off. But like I said, at the end of the day, DeFi needs to win. We're just of the opinion that Radix provides the best path to doing that. But we'll let the market decide.
We'll see, Jeremy. I appreciate you making the time. And if any of you guys are interested to learn more, check out the links down below in the description. But Jeremy, thank you, man, for making the time. It was a great conversation, and always good to catch up, man.